Morning, everybody. It's the 8th of July. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Morning, mate. Oh, it's coming home. That's a
Yeah, do you like
great
that?
name. Yeah, I like the way you did that.
Changed it. Yeah, so yeah, loved it.
Yeah, I
So
mean, it was quite
listening to
stressful.
Free Lines on the radio this morning, just thinking if we do win on Sunday, I might actually cry.
Yeah,
I was just
well,
like, I had a lump in my throat listening to the song this morning. Just thinking, oh my God, this is
yeah,
just brilliant.
it is. It is. Yeah, so maybe, I don't know.
Let's not get carried away, eh? Because
Yeah, exactly.
there was 9 minutes yesterday when it was all going to pot.
Yes, yeah. It was a weird one, wasn't it? Felt
Yeah.
like maybe Kane should have had a penalty earlier in the game, and then
God, he throws
um,
himself around on the floor a lot, doesn't he?
he does that. They all do, don't they? It's
I
like
know. I mean,
if it,
obviously, I'm grateful for the free kicks, but from a personal point of view, and just sort of falling to the floor that easy, it just aggravates me. It's probably because
I
he's a
know.
Spurs player. Doesn't
Maybe
help.
that. Maybe that's why. If it was Saka doing it,
Yeah, obviously Saka,
uh,
it'd be the best thing in the world. Okay, let's crack on. So, headlines yesterday: European Central Bank policymakers are said to have agreed to raise their inflation goal to 2%, which I think that's fairly normal for most economies, isn't it? 2%. That's certainly the Bank of England target.
yeah. I mean,
Um,
yeah, it's a
but
lot.
they've given them a
I
little,
feels like it's a lot higher than that, but
yeah.
yeah. Okay, we believe you.
Yeah, so there's room for an overshoot if they need it as well. It's a revamped strategy that could give officials the justification for sustaining ultra loose monetary policy for longer. Over on the Federal Reserve side of things, obviously, we had the minutes out from them yesterday, and they were not ready to communicate a timeline for tapering due to the high uncertainty on the economic outlook. So, feeding, adding fuel to the fire in terms of the equity markets, and letting them know what they want to hear, really, despite them being off quite considerably today. So, maybe not said enough or not given enough clarity there. So, yeah, we're obviously looking towards the economies now to start reopening from the pandemic. The minutes showed the committee had a lot of questions about how soon labour shortages and supply bottlenecks contributing to inflation would be resolved, and I don't think there's any clear indication on that. Um, Elsewhere on sort of geopolitical front, the president of Haiti was assassinated in a nighttime attack yesterday. So that's pretty severe stuff. The president was murdered by highly trained armed killers who stormed his residence about 1 a.m. on Wednesday. That's according to the acting prime minister. The first lady was also injured and has been medically evacuated to Florida. So that's pretty scary stuff.
That's not nice to hear, is it?
No. On the COVID-19 front, the global death toll has reached the sombering figure of 4 million as there is a growing disparity in vaccine access, leaving poorer countries and nations exposed to outbreaks and more infectious strains. So, obviously, that's not very good. The UK, just over 1,000 extra deaths have been reported. That's amid higher vaccine rates in both the UK and the US. Coming up today, we have the British Transport Secretary setting out changes to travel rules in a statement to UK Parliament. So obviously, from the last night, the main news is regards to the FOMC and Fed and their minutes. That has provided quite a bit of volatility. We are seeing equities quite a bit on the back foot today. So I don't know if that was sort of your starting point, Steve, or where you were looking to go with this today, or is there
Yeah,
anything
sure.
else that's caught your eye?
I'll cryptocurrencies have caught my eye, but yeah, I'll dive
Yeah, let's go get
into.
stuck into that then, if that's where you want to go.
Yeah, shall I go in there first?
Yeah,
Yeah, I just sort of like my gun to head trade yesterday. Absolutely nailed it. Unfortunately,
not within the time.
we shut it when it was about here.
That's a
But
cracking
yeah,
trade, though.
yeah, moved lower along with the equities. I think it's sort of like, rather than it being a bit of a safe haven, it's not really. It follows it. Yeah, levels to watch, and also on the weekly chart, we're getting a bearish engulfing candle there. So doesn't look very good. We're broken below the support of the Ichimoku cloud. Really need to see I would say, a break of these levels back here. The support comes in just below us, 32,700. A break of there, it's basically another lower high we've posted. We can see them, one here, one here, one here. So 35,000 now acts as resistance, and above that 36, above that 36,700. So that's cryptos out the way. Let's dive into indices. We've got the last couple of hours, we've seen a decent sell-off, and we've got down to this level of previous support here in FTSE 70.74. We just bounced off that, trading just above it. Feels a little bit like we are on the back foot, and we are going to see more lows before the US cavalry come and save us. And yeah, so a break below 70.74, we should see that accelerate. Next support in FTSE is down at 7,000, just above 7,000. On the DAX side of things, same sort of issues really. So pushing down towards support, we've got 15,455 as the line in the sand this morning. Break below there, and next level of support is a couple of 100 points lower, 15,278. Above, we've just sort of been sold off from 15,723. Above that, 15,760 is the other resistance, but we're below the Ichimoku cloud, although it's quite a flat cloud, so expect it to be a bit spicy around there. US as well sold off, and basically rejected the 34,850 level again. So once, twice, three times, my lady. And we're pushing down towards the support of the Ichimoku cloud. We had the spike lower on the 6th, and we're retesting it here on the 8th. We've got this 34,000 interim support, 34,327, but below that, really, the 34,200, we need to see it break there before we get too nervous about it. We expect buyers to be loading up again around about these levels, in front of these levels. So we had a new all-time high in, let me get rid of that, in NASDAQ yesterday, just below the 14,900 level, 14,892.6 on this chart, and we've pushed lower. We're about 100 points lower than that now. If we do get below 14,736, then I think we could accelerate to 14,639. But obviously we're still in this huge uptrend, so no real first signs. Maybe, I mean, it's a hanging man candle and a sort of a bearish outside candle on the NASDAQ on the 4-hour chart. So possible signs of reversal, not reversal, sort of correction, but I won't get carried away just yet. We'll see where it ends up at the end of the day. On the S&Ps, similar sort of price action, pushing down. Next support level comes in. Here we go, a nice little one coming in here. 4,315. And then we'll have the cloud support as well. So that was a previous swing high, which was resistance broken, then became support, acted quite nicely on one occasion. Will it support price action today? Not so sure. China 50 has broken pretty aggressively. Let me look at my weekly chart on this that we've talked about before. The ABC correction looks like could be playing out. Really, 16,500 is the level to close below. If we can close below there on a daily basis or a weekly basis even, then this is in trouble, my son. We're back into this range that we had before, but the ABC measured move is down at 14,400. So watch out, China. Nikkei, this downward trending resistance line, bit of a triangle formation that has a bias to break to the upside, but currently it's looking like more likely to retest the 27,133 level. The Hang Seng, that has performed a bit better, but obviously on the back foot this morning. We've seen support coming in on a weekly basis around about 27,500, and we've smashed through it this morning, and looking pretty negative. Looks like we're aiming for this downward trending resistance, which was resistance, will now turn into support, because we've got a level, a horizontal level back here as well, and going all the way back to here. So that could be the targeted move. Let's move across to commodities. Gold has been pretty interesting. Crude oil obviously is forming a really nice, spicy weekly bearish outside candle. Could this be the start of the correction? We hit the resistance and reversed very sharply. So that was smashing, mate. And if we look at the 4-hour chart on the shorter term time frame, we've broken below both supports from previous weeks. And we're currently below 71.63, which is going to act as a little bit of resistance now for me. Volumes have been quite high on this sell-off, so there is signs of longs getting out, taking profit from this really decent run we've had in oil. So yeah, possibility of a correction in oil, and we'll see how that plays out. Gold looks like it's pretty much recovered quite nicely. It's held the 1790 level, which was resistance, and bounced sharply off it. Didn't quite get back above the 1815 level. That would be the next phase to sort of like lend support to the bullish potential of this. And yeah, as we can see here, trading around $1,800, 1790 support, 1815 resistance. Could go either way really, but looks like it's forming a little bit of a bottom, bit of a temporary bottom in place. So my long-term view on gold is bullish, obviously, as everyone knows, and now my short-term view is also turned mildly bullish. Over to you, Joe. Caught you out there, didn't I?
Yeah, you did. So right, onto FX. Dollar index first up, and yesterday was another positive day, further backing up the big move high that we saw on the 6th of July. So we're breaking above this previous high that we posted on 2nd. And although we're slightly on the back foot today, it is holding up compared to some of the other riskier FX markets, which I'll come on to shortly. So again, highlighting this red level in red here, which is at 63.02, gap fill from the 5th to the 6th of April is what I'm looking at there. Then above that, we've got this 93.43 level, which is all important on the longer term charts for me. And just to refresh your memories as to why, we have, I believe, a pretty large double bottom pattern forming. What have I done to my charts here? Let's hide that. There we go. Breaking above that 93.40 level completes this double bottom pattern, and then we can start looking for targets up here at 97.66, which is the measured move. So taking the low to the high, projecting it higher. Also a 61.8% fib level from this high up here down to the low, comes in at roughly the same level. So we've got two really interesting levels to target there, and for me, that's where I think it's going over the medium term. In terms of what's happening elsewhere and the knock-on impact of the strength that we are seeing in the dollar index, let's firstly flick over to euro dollar. And this is quite an important move today as well. We've actually seen it test the neckline of this head and shoulders top pattern that I've drawn on the daily chart. So breaking down various levels, we broke down through this level over the last couple of days. More weakness yesterday, little bit of a bounce today, but it's coming bang in line with that level. So maybe there are some buyers that are trying to do a job of defending that, in a last chance hope that it is actually going to do something on the upside. I think if this breaks on a closing basis, then we can start targeting this horizontal support down here from the lows that we posted in March. If that gives way, then I think all bets are off for long trades on euro dollar for quite some time. A medium term top is formed, and we can be targeting lows down to this kind of zone at 110.60 ish. So potentially on the cusp of a even bigger move on euro dollar. If we take a look at some of the other dollar linked assets, Aussie for me has already completed the top. And we're getting further confirmation of that today as we're taking out the lows that we posted on the 1st of July. Quite a considerable reversal posted on the 6th, being backed up with 2 further days of selling. This really looks quite ugly now. Lots of fresh air for this to move into on the downside. The measured move target of this head and shoulders top comes in at 70.57. So really now on the cusp of some potentially sharp and aggressive downside moves. If we take a look at Aussie yen, this is quite interesting as well. Big range that this has formed, big sideways price action that's been going on really since February, and now we're starting to break down. So another top pattern is has formed here. In terms of sort of measured moves, we're looking down to 79.16. Really big impulsive move through this support level today. So really looking quite ugly on that front. Elsewhere, what have we got? Anything yen linked is all starting to look a bit scary. This is sterling yen, again, sort of rounding top formation that's been taking place over a number of months. This is the key low that we're looking at now from the 21st of June at 151.31. We're pretty much at that level now. If we get a closing break there, then we can start thinking about some lower prices. New Zealand dollar, Japanese yen, same thing, massive reversal that took place on the 6th of July. And it looks to be heading lower. So finally, we're seeing yen actually come to the fore as a bit of a safe haven. It seems as though money is shifting out of these riskier assets and moving into things like US dollar and Japanese yen after months and months of yen doing, pretty much nothing and just declining ever lower. Also looking at some of these other assets, dollar CAD, big move through this resistance at 124.87. We're now targeting 126.47. Again, potentially some sort of bottom formation taking shape here, maybe a cup and handle kind of formation, which again is another fairly positive and bullish reversal pattern. So looking for higher prices there. Technically, this is a nice one. It's broken out of this downtrend channel or wedge. We've seen a push higher, we've seen a retest, and now we're seeing a continuation to the upside. Not really much going on with dollar Swiss, although clearly positive. Fancying the dollar over the Swiss yen at the moment, but they're kind of cancelling each other out as safe havens today, it seems. Dollar yen, quite interesting. A big break of trend. I've been a big supporter of dollar yen on the long side for a number of weeks while I've been sort of waiting for this bottom pattern to emerge on the dollar index. But now it appears as though we're getting a break of trend and things look to be heading lower in the short term. So things happening on the FX side of things. Potentially some big moves going to start occurring, and so we're establishing, I think, some changes in trends which should provide some decent trading opportunities. One other thing I wanted to add actually was on this chart here, which is what I often look at for assessing equities versus bonds. So at the top, we've got all the equity markets. We've got the Euro Stoxx 600, FTSE 100, and the S&P 500. Three really broad developed indexes all priced together. For a while, it's been sort of hanging around this kind of resistance level up here. Just shrink that quickly. Potentially forming a bit of a doji here in a hanging man candle from the previous week. So maybe running out of a bit of steam. But really where the story is on the lower chart, which is the ratio of these equity markets versus their respective 10-year government bonds. And in the past, we can see when the equity versus bond ratio has got up to these kind of levels, it has often signified a bit of a reversal. And in recent days, we have seen actually quite a bump up in some of the 10-year treasuries in the US in terms of the price, and also in terms of like UK gilts as well. So maybe we are going to see a little bit of a correction in equity markets, people starting to favour bonds in the short term. I don't think that's necessarily an unhealthy thing because, we have seen some huge run-ups in these equity markets, and maybe just an opportunity for a bit of a reset and maybe, an opportunity for people to get on board with some fresh equity positions and freshen up their portfolios a little bit.
Excellent, mate.
Okay, gun to the head. As Steve alluded to earlier, he nailed that Bitcoin trade, but unfortunately just run out of a little bit of time. He did manage to secure around about 300 ticks on it, though, which is fantastic. And that's 0.75R. I also made 0.91R on Aussie dollar. Traded that quite successfully for the last couple of days. Again, further evidence that some of these top patterns are now starting to complete, and hopefully we can get a decent run in a preferred direction and actually have some bias to help us with trading. Steve, you got anything you fancy today?
Well, as I said before or alluded to, the US cavalry will come and spoil the party for me at some point. I love a little bear market on the indices. The one really, I don't know, mate. I don't know. I've got so many to choose from. Which one am I going to go for? I'll stay away from the FTSE because it's got a big dollar bonus behind it. Gold, oil. Well, what about going gold, actually? Because I think if we do get a bit of a sell-off, bit of follow-through, we might get gold picking up a little bit. So I'm going to go longer gold. Obviously, I wanted to get along at 8 o'clock. No, that's a joke. Let me go longer gold now. The stop, I think, really... We'll put the stop go at 1800, just below 1800 should we do, and really look to break the 1815 level and target a move higher. Look to get to 1820, 1825 is the next resistance. So just a 2-to-1 risk reward, and I'm getting in. My stop is pretty tight, mate, to be honest, just below $1,800. 1805 trading now, yeah. Buying it, getting long, and looking to take profit at 1820, stop just below 1800.
Nice. Okay. Well, where there's been quite a few big moves already today, it's a struggle to find anything that's not looking a bit stretched. So when in doubt, go to Bitcoin, as Steve always says, when he doesn't know what to do. So that's what I'm going for today. I like Steve's analysis. I think he's on point that this is potentially moving lower. This is the hourly chart, just potentially a bit of a breakdown here through some support. I know there's some more support to the left-hand side here to be wary of, but just really focusing on something ultra short term here. And yes, I'm aware it's very oversold already, but I fancy it here. It's currently trading at 33,039. I'm going to put a stop loss at 34,027, and I'm going to target these swing lows down here at 30,210. So looking for around about 3R on Bitcoin today.
Nice one.
Okay, Steve, we jumped the gun yesterday a bit with regards to oil. We were telling people that the inventories were yesterday, but they're actually today. So it's 4 o'clock today. Maybe because it was Labor Day, Independence Day on Monday, so everything may have been pushed back. We've also got initial jobless claims at 1:30 today. The number is expected to fall to 320,000. So a couple of bits to keep us interested. Obviously, fallout from the FOMC and Fed minutes. But we've also got latest minutes out of the ECB as well. So again, plenty to keep us interested, and certainly off to a very volatile start today. So be careful if you're trading. We'll be back tomorrow morning. My old mate Pete saying the price of fish and chips has gone up.
Well, yeah, of course. Why not? Put the price of fish and chips up. Absolutely. It's coming home.
It is coming home. Well, let's hope so. Anyway, okay, guys, thanks very much for watching, and see you tomorrow.
Cheers.
Bye.